And we're very pleased to have someone to discuss this with us in a keynote. She's not here physically, but thanks to technology, she's joining us remotely to discuss the future of VAT, perspectives of reforms, and it's Rita de la Feria. Thank you very much.
So hello, everyone. I'm really sorry to have stopped you from going for the coffee break. I'll try to be as succinct as possible. First of all, let me thank the EU Tax Observatory for the invitation, and particularly Gabriel Zuckman. I also would like to apologize for not being there in person. I would have very much liked to be in Brussels with you today. Unfortunately, I just arrived this weekend from Singapore, and I thought it was a bit of a stretch physically to travel to Brussels yesterday, but hopefully there will be other opportunities in the future. Now, what I was asked to talk about was VAT, but I decided to expand the topic a little bit, and I hope the organizers will forgive me for that, and look at the role of VAT within the EU tax mix. So branching it out a bit and try to understand how it fits in the context of the other EU tax instruments that we have. So what I'm going to do is first talk about what is the tax mix in the EU, then talk a little bit about the high salience of corporate income taxation on multinationals, to see whether it's fully justified, the attention that we give to this tax, and then zoom in on VAT and why I think that VAT in essence deserves more attention than it gets. There are some advantages to its low salience, but there are significant disadvantages, and it's about these that I would like to talk about primarily today, and hope to convince you that looking at VAT will pay off in the medium to long term for our European project. Okay, so if you look at the tax mix, what you see, I know that from the screen you probably cannot see the exact what the colors mean. But what I can tell you in essence is that the blues are general personal income taxes. So personal income taxes lato sensu, to include social security contributions, etc. So taxes on individuals. The yellow is the general consumption tax, and what you see in red is the corporate income taxation. So in essence, the majority of our EU tax mix across all member states is composed primarily of personal income taxes and VAT. Corporate income taxes make a relatively small part of the EU tax mix across the board, so across all of the EU. These are based on 2019 data from the Eurostat, but of course this is a general trend and no reason to think it has changed since then. So when you look at that graph and you kind of think about all the attention that we give to corporate income taxation, and particularly the corporate income taxation of multinationals, which is not really the all of corporate income taxation, but it's like a subset of the corporate income taxation, it's not completely obvious why this topic has acquired such a high salience. So why do we discuss this so much as opposed to other topics? Why not discuss personal income taxes more? Why not devote more resources to personal income taxes or to VAT? And I think that there's a bunch of things going on, but you can see that there's a lot of public interest in the topic. There's a lot of media attention. Of course, all of these kind of mix up with, once you have public interest and media attention, so you have political attention. There's a lot of academic attention as well. So you see a lot more papers published on corporate income taxation than on other areas of the tax system in relative terms. And you then see all these resources, both human and financial resources, allocated to this specific area of the tax system. Now, if you try to think about the reasons why this could be, possibly you could think, is this because there is a specific unique tax loss and base erosion attached to M&Es? And of course, there is obviously going back quite some time, since the beginning of capital mobility, some level of base erosion. This is well documented, and profit shifting. This is well documented in the literature. But when you look at the tax gaps of the member states, a lot of that tax gap is concentrated on SMEs. So not on multinationals, but on small and medium-sized enterprises. Now, in general, the public tended to kind of not care. The literature indicated that the public tended not to care so much about white-collar crime and the tax evasion, because in the case of SMEs, it's not so much tax avoidance, but specifically tax evasion, so underreporting of income primarily, although there are other types of tax evasion going on as well. But the literature indicated that people didn't care so much about this. This attitude seems to be changing. In a recent paper that I published with a team in Montreal, a team of political scientists, we found, looking at empirical survey done in France and the US, that the levels of tolerance of the public as regards tax evasion by small businesses, in this case, a car dealership, a fast food restaurant, and roofing. So we gave them scenarios to people to try and ascertain their attitudes towards tax evasion from these small businesses. And we were surprised with the level of negative reaction of the public. So in essence, people are no longer tolerant of tax evasion by small businesses, but they think it's prevalent. So even though they don't agree with it, they think is now a common thing. So the mean in France was 52, in the US 58. So people think that there's a lot of evasion going on. They don't think it's acceptable, but our attentions are not so much onto this specific type of evasion. Now, is it because do we give a lot of attention to corporate income tax and M&Es because they are a unique instrument of progressivity of the tax system? And of course, taxation of capital is a critical element for the progressivity of the tax system. But we also know that there is an unsettled empirical question as regards the incidence of the corporate income tax. Capital does not necessarily correspond. This is stereotypes. Is not, this small group of very rich people, that own big businesses, but the capital is spread out in some cases in pension funds that all of us in Europe contribute to. So when we look at the kind of progressivity of our tax system, our main instrument is still personal income taxes, and plus some rather unpopular taxes that we don't talk about so often, but would be quite positive in terms of progressivity of the tax system, such as property taxes and inheritance taxes, right? So that's not the reason why we look at corporate income taxes and M&Es either. So could it be that it has unique challenges in terms of globalization and digitalization? And here it's true that capital mobility is arguably unique. So when capital mobility started more intensively in the 1960s, it was a quite unique phenomenon. And it was attacking specifically, a challenge specifically for the corporate income tax system. But when we look at digitalization, this is not true anymore. So digitalization is presenting challenges to corporate income tax, of course, but it's also presenting very significant challenges now to personal income taxes and to VAT. So the digitalization of the economy presents challenges to the overall tax system. It's not concentrated on corporate income tax. So none of these kind of obvious reasons to look at corporate income taxation are really pan out. So it's not more intense. The erosion is not more intense on corporate income tax of M&Es. It's not our main instrument for progressivity of the tax system. And it is not subject to specific challenges from globalization and digitalization. So of course, this doesn't mean that we shouldn't look at corporate income taxation, but it means that we shouldn't just look at corporate income taxation of multinationals. If we want a progressive tax system, we have to look at other instruments within the tax mix. And in essence, the reason why I think, so this is just my sense of why we don't, is because there is a bunch of other things going on that are not fully rational. So from a policy perspective, it is very easy for politicians to talk about avoidance or to talk about big businesses as a method of revenue mobilization without accepting that taxes probably will have to be raised on voters. SMEs crackdowns are costly. The enforcement elasticities will play out, as in it's costly to go after all these SMEs, and each of them will represent a very small part of revenue. And it's not very popular because SMEs are owned by individuals, often, sometimes by families. It's not a particularly kind of policy headline vote winner. There is also some element, I think, of path dependency. We have been looking at corporate income taxation for such a long time. We kind of have got stuck with it and have kind of forgotten that there is other elements of the tax mix that also merit our attention. And of course, there are public demands. And here, there is an issue really of why does the public care so much about this? This is also kind of a question mark. My sense is that M&E multinationals are kind of the brand recognition makes them kind of ideal others to pay taxes. So most people want taxes to be paid, but they would prefer not to pay them themselves. So the multinationals represent kind of the obvious target. So why are they not paying? And I am. So on this is interesting, I think, also that that when these corporate tax scandals happen, it tends to be brands that we recognize. So like Google or Facebook or Amazon, etc. So brands that we are familiar with and people can emotionally attach more to it. So I think there is a bunch of things going on, but I think that if we are to kind of have the progressive tax system that is ideal, that we would ideally want for Europe, we kind of have to break away a bit from these these elements and try to look at other taxes, including the VAT. So the low salience of VAT is what I would call a quiet success. Invented, in essence, or implemented for the first time in Europe in the model that we know it now in 1954, and it has spread around the world, is now regarded as a global tax phenomenon. Over 170 countries in the world apply a VAT. The role of VAT on the tax mix is increasing globally, so it is more important today than it was even 20 years ago or 30 years ago, and it's more likely to increase in the future, not least because the global trends that we just mentioned, globalization, digitalization, present bigger challenges to income taxes than VAT. They present challenges to VAT, but bigger ones to income taxation. So VAT is a global phenomenon for practical reasons, but also for technical reasons. It's an effective revenue mobilization tool. If well designed, can be neutral and efficient tax. It has a big limitation, which is the equity element, which we'll come back in a minute of how we try to increase equity and how we try to address the regressivity of the VAT. But in essence, that is regarded as the biggest flaw of the tax. Now, the low salience has had not only advantages in terms of revenue gathering, but it has allowed governments to increase the role of the VAT worldwide and fund public services, but it has also had the advantage of being able to solve specific problems, relatively smaller problems for VAT, but that are big problems in income taxation. This is the case of digitalization. We have VAT was subject to a lot of challenges from digitalization, like all other taxes, particularly in the context of online sales. We have made a huge investment in Europe, but also more broadly at the OECD level, to adapt our VAT systems to the digital economy, and we have done it very successful. So even though it doesn't get much attention, this is a massive success for TaxSud and for the OECD as well. VAT systems are now successfully adapted or more broadly adapted to the digital economy. But the low salience has had disadvantages, and the big disadvantage is that we haven't addressed big challenges. And because we don't talk about it, we have allowed that information gap to be exploited largely by special interest groups. And it's to that I'm going to turn now. So the big elephant in the room in VAT is the fact that we don't tax almost half of all consumption. So VAT is supposed to be a general consumption tax. All consumption is supposed to be taxed. But we don't tax almost half of it. We used a measurement for assessing this, is known as the C efficiency measure, and broadly it measures the difference between all consumption and the consumption you actually tax. And in Europe, this is broadly half-half. Now, in some countries, in developing countries, this non-taxation of some of the consumption is broadly related to a formality and a big compliance gap. So the fact that there is a lot of fraud or a lot of informality will mean that that the consumption that is taxed is lower than the hypothetical overall consumption, overall tax base. This is not the case in Europe, broadly speaking. We do, of course, have informality. We do, of course, have a compliance gap. Some member states have it higher than others. But the big reason why we don't tax such a big part of all our consumption is a policy choice. We opt not to tax it, either by exempting a huge amount of items, services primarily, or taxing them at a much lower rate. The case in the European context, primarily products and goods. So it is a policy choice that we have made not to tax consumption. And why we have done it? In essence, we have done it to diminish the regressivity of the VAT. So to address that problem that we talked about earlier, the equity problem. So the question, though, is this a good choice? And in essence, the short answer is it is not a particularly good choice. Why is it not a good choice? Because the benefits that we have tried to attain, so we have tried to reduce the cost of essential items for low-income households, has broadly not been very successful, and the costs of not taxing this consumption are very high. So starting with the benefits, we assume that if we lower the VAT, that cut on the VAT, and we have had this discussion across Europe many times over the last year or so in the context of high inflation costs, we assume that that cut is going to be passed on lower consumer prices. Now, we know that in theory, this is supposed to happen in competitive markets, but we know that it does not happen. So what we see is that there is extensive empirical evidence on the pass-through of these decreases. And what we see is that often it is not passed fully to the consumer, and much of the cut is absorbed by the retailers. Now, we have tried to do these studies, this empirical evidence across different countries, in the context of different products, in different economic cycles, and the results are broadly identical. Now, there isn't a single one answer on the pass-through. The pass-through is heterogeneous, so it depends from context to context. But generally speaking, the trend is that the cut is not fully passed through to consumers. But even if it was, would we be protecting the lower income households that we wanted to protect? And what you see there is basically data from a specific country and on how much savings each quantile of the income distribution does when VAT is lowered and passed on consumer prices. And what you see is that the majority of savings goes to the 20% richest in this country. So the last quantile, the quantile 5 of the income distribution. Why is that? In essence, because rich people consume a lot more than poorer people. And they don't necessarily consume more in quantity, but they consume more in price, which is where VAT goes. VAT is on price. So if you buy a packet of rice that costs €1, it will have VAT saving on a rate of 20% of 20 cents, let's imagine. If it is of 2 euros, it will be a saving of 40 cents. So in essence, the savings almost all accrue to the top of the income distribution. And this is even worse when you think about items that are not consumed by everyone. So you think, for example, of healthcare or education. What you see, in essence, is that the benefits accrue almost totally to the top 10% of the income distribution. Why? Because, in essence, healthcare and education are also available publicly, and the public services are not usually subject to VAT. So when you exempt these services, what you're exempting is private healthcare and private education. And this is almost always consumed by the top 10% of the income distribution. Similarly, with cultural events and books and all those things that many of us enjoy, but that are regarded by the legislator as merit items, things that the legislator wants us to consume, in the end, they are almost all consumed by the top of the income distribution. So what do we see when we take away VAT on these products? The regressivity of the tax system actually increases. So we are trying to decrease the regressivity of the tax system. We actually have increased it. Why? Because now we are not taxing the consumption of the richest, but the poorest are not benefiting from those tax cuts. In addition to this kind of benefits problem, the fact that we are not necessarily protecting the poorest, we have a bunch of other problems created by these exclusions from the VAT base. We have loads of litigation across all member states on qualification problems. So to determine if something is subject to a reduced rate of VAT or a standard rate of VAT is often quite problematic. Across the EU, for example, we had cases regarding e-books. Several member states have had litigation concerning whether e-books could be regarded as books for the purpose of VAT or not. Now, of course, a lot of these cases are very funny. I use these products often, these litigation type products, in my classes because it appeals to my students and it makes them laugh. But this represents a huge cost for all member states to, in essence, run all these qualification problems, creates administrative costs and judicial costs, as well as economic distortions. In addition to that, you have all these cases concerning avoidance that are to do with exclusions from the base. So this is a kind of a broad picture that I on data that I myself collected on court cases on VAT avoidance between 2000 and 2020, so in the space of 20 years. Of course, the amount of cases that reaches the European Court of Justice is relatively small compared to the overall litigation. But of these cases that reached the European Court, only a small fraction did not concern the VAT base. What does that mean? In essence, that if we removed exclusions from the base, we would almost eliminate completely VAT avoidance. So at best, benefits are dubious. You have an incidence problem, a distributional problem, and the costs are very high. You have litigation, you have avoidance, you have administrative costs, and of course, this is a massive expenditure. We spend a huge amount of money not taxing these products, so not taxing the consumption of rich people. And of course, that money could be put to good use on public services. And yet, despite all this evidence, we continue to narrow our VAT basis. Why? Well, in essence, because this is a political economy problem. Now, we know how to address the regressivity of the VAT, and it's not the way we do it in Europe. We address the regressivity of the VAT by doing direct transfers to the poorest income households. So we compensate the poorest for the VAT they pay, and we tax the consumption of the richest. This is done in New Zealand. This is done to a large extent as well in Canada. But we haven't been able to implement it in Europe, largely because it is politically very difficult to do this. Broad-based VATs are very difficult to implement because partially the low salience of the VAT, because in general, we don't discuss VAT a lot. And when we discuss VAT, it is always in the context of a public campaign mounted by a special interest group about reducing the VAT. So about reducing the VAT on energy, or about reducing the VAT on tampons, or about reducing the VAT on ebooks, etc., etc. So what you see is, in essence, that the discussion on VAT, it is centered because we don't discuss it generally, because generally it has low salience. When we discuss it is when it is part of a lobby campaign. And in that case, it is always framed as a fairness issue. So no company is going to say, oh, we want reduce rates of VAT because it's good for our business, increases our profits, increases our sales, etc. It is always because it's good to protect the poor, or because it's good for employment, or it's good because of gender equality issues, or because of the environment, etc., etc. So the package of the lobbying is not always not about getting a tax break, but it is always about some fairness, progressive cause that people can relate to and that are interested in. So in essence, that vacuum of information is filled on specific situations by these groups. How do we break that? We break, first of all, by combating information asymmetry, actually explaining that this is not really a question of protecting the poorest. We have other ways of protecting the poorest, that in essence, it's not fair for someone that is going to the opera, or the top 2% or 3% of the population that go to the opera, like myself. I like the opera myself, but it's not fair that we don't pay VAT on those services, at the expense of taxes that are not paid, that could benefit the poorest, that cannot afford to go to the opera. So the fairness narrative actually should be the other way around, that it's not fair not to tax the richest people consumption to the detriment of revenue that could be used to protect the poorest. Now, there is also an issue of trust. There is also an issue of in essence, people not believing that the benefits are going to eventually accrue to the poorest. On this regard, a colleague of mine and I, the co-author of mine and I, have a proposal. We call it the progressive VAT. In essence, this progressive VAT would not be a progressive VAT in terms of the base, in terms of the design of the base, but in essence, it would be a real-time return of the VAT paid. How would it work? In essence, when you went to the shop and went to the cashier to pay your shopping, you would give your tax number. The cashier would send the number in real time, using real-time technology, to the government. In essence, to the portal, or the tax administration portal, that would identify you or not as a low-income household, and the VAT would be returned to you automatically. Now, this technology already exists, and it's used in many countries, including some member states, for the purposes of anti-fraud. But what we are proposing, in essence, is to alter that technology to introduce an element of return of the VAT rather than just using it for anti-fraud purposes. Digital ways of returning and doing transfers have also been experimented during the pandemic, so we can benefit a lot from experiments that have taken place, including in some developing countries. So there is no reason from a technological perspective that this shouldn't work. The results would be, in essence, massive equity gains, because now we would be protecting the poorest. There would be also significant efficiency gains, because from operation of the market perspective, there would be one single rate of VAT. So revenue efficiency would all go up. At the same time, that inequality would come down. And this would be, from a political economy perspective, much easier to explain to the public, because in essence, for low-income households, it would function like a personalized exemption. So they would never have to pay the VAT. The VAT would, in essence, be irrelevant to them. So there is no cash flow impact. There is, in essence, a personalized exemption. There would also be some other kind of more nerdy possible advantages at compliance level, at trade balance level. There is some risks, of course, with privacy, but no bigger than the current ones already when we use real-time technology for anti-fraud purposes. So to sum up, attention given to a subsection of the CIT is not easy to explain. The low salience of VAT has some political advantages and some policy advantages, but it leaves the tax open to strong lobby. The reform of VAT would have, and particularly of the VAT base, would have very significant financial and distributional ramifications. And to a large extent, this is really the low-hanging fruit in terms of a progressive tax system. So it is difficult politically, but from a technical perspective, this is easy money. So it is money that we know how to get, we know how to tax these transactions, we know how to protect the poorest. So there is no reason that if it is to ignore or to not pursue this avenue if we want to construct a better and more progressive tax system for Europe. Thank you very much for your attention. Here are a few articles mentioned during my presentation where you can do some further reading on the topic. Thank you.